afternoon. So we had the rand hitting its lowest point in nearly 6 months on Friday and staying weak by the close. Some relief coming through initially with geopolitical tensions in Egypt having eased a bit this morning. Outlook for the unit as we head into this week, because it's been half a trading day and we've seen weakness back on the table.
Absolutely. I think what we're seeing at the moment is a kind of way up of what risk really looks like, where the returns lie, and certainly from a global perspective around the sentiment, specifically with regards to the Egyptian region, the knock-on effects that we're still seeing coming out of the Eurozone, the uncertainty around some of the sovereigns, with the likes of the ECB having to get involved in the bond auctions out of Portugal. So there are those uncertainty factors that remain in the market and creating that volatile environment that we find ourselves in. But that being said, the rand at the moment, as you said previously, slightly weaker than the levels we saw on the close on Friday. We did see a bit of offshore bond buying, which helped to support the rand. But overall, this euro weakness that continues to follow through is continuing to see rand weakness persist.
Where we've got emerging markets really bearing the brunt of it, that has been one of the big pressure points on the local unit itself, and really fueled by inflation fears. We were chatting this morning, though, about how an upturn in developed markets like the US could potentially spell good news for the likes of the South African market. So long term, we could be looking at potential support for the local unit as well. What's your view on that?
My view at the moment is I think that the inflation outlook for the globe is something that's under a lot of debate, just with regards to where people are finding real value. In the past, and certainly in the last year, there was a lot of value found in the likes of fixed income assets. That is starting to change. You're starting to see a switch out of the fixed income market back into the equity market. You've seen gold rally, etc. So those safe haven assets, as well as the fact that the global recovery seems to be coming back on track, the likes of the US data that's coming through, earnings results, etc., starting to pose some form of momentum into the equity market, which has seen a rally right across the board and in South Africa as well. So from that perspective, certainly, but I think on a currency outlook, if you're thinking that the exposure that we have to foreigners invested in our fixed income markets poses a risk, that potentially could pose a risk to the rand levels that we're currently trading at, as well as the fact that we continue to see the central bank participating in mopping up some excess rands in the markets.
In the meantime, we've seen this broad dollar strength filtered through, and yes, the dollar pared gains on Friday, but it's really remained strong against a basket of currencies. And global tensions aside, it's been underpinned by constructive US data. Sustainability of that strength that we've seen filtered through in your books?
Look, I think that we've seen, the retail sales numbers are coming out this week. Market is looking for a much better number. It's followed on by what we saw coming through in December, should follow through in January, which gives the market that impetus that it's looking for in terms of wanting to buy back into the equity market. I think there's still a lot of headwinds inside the global outlook, specifically in the US. If you look at the deficit that they're running currently, President Obama is going to be making statements around their budget and what they're looking for going forward, looking for cutting almost $1.1 trillion in the next 10 years, which is quite aggressive. But I think you're going to find a lot of pushback coming through from the Republicans, with the likes of saying spending cuts based on 2010 numbers, when you've got when you had these huge spending sprees coming through past the crisis. I think that that's going to be something that's going to come under debate, whether or not they shouldn't impose spending cuts at the 2008 levels. So I think there is still certainly a lot of headwinds in the market from both a South African local domestic perspective, but certainly from that global outlook in terms of the inflation.
With that playing out on that end, if we take it across the Atlantic, traders becoming increasingly wary of buying the euro, with the unresolved euro debt or eurozone debt crisis being one cloud that's been hovering about, as you alluded to a little earlier, but also ECB succession politics, the other cloud that's hanging. How are you reading that situation?
Well, we're seeing a lot of, there's different factors. Unfortunately, with the Eurozone being so segmented, you're starting to see the likes of the talk again about, West Landesbank today saying they may potentially need some form of bailout. These kind of, notices in the market are unfortunate, because what it really does is it creates that jitter within a negative sentiment around the zone anyway. I think that the continued persistent sell-off into the Eurozone probably will persist for the foreseeable future, which also poses upside risk to the rand. I think that what we're going to see, though, is some form of feed through in terms of the US. Interestingly enough, also looking at the fact that their various regions are very diversified in terms of the type of income that they have in the housing sectors that they have. So as much as it is a unified monetary policy, nonetheless it is a segmented state that they're managing.
Let's hone in on the UK specifically, because inflation risks in the UK has certainly gotten the rhetoric going in terms of the tightening that's needed. And then we saw the BOE coming to the fore on Friday with a big surprise and keeping rates steady. What did you make of that decision?
Absolutely. I think that at the moment they have to keep rates steady. They certainly are continuing to do some form of buyback policy. I think that will persist for the next couple of months to come, and I certainly don't think we're going to see any aggressive hiking coming out of any of the major regions in developed world only towards the second half of this year. That being said, though, inflation is something that everybody's talking about, and it is something that is a massive concern. I think that we are going to start seeing it in South Africa specifically. If you're looking in terms of pricing, people are going to start pricing in interest rate hikes a lot sooner than we potentially had anticipated, which was in the first quarter of 2012.
Of course.
So the outlook for global inflation does remain relatively high.
Of course, we've got the BOE quarterly inflation report expected later this week. Here in South Africa, CPI numbers being anticipated, as well as retail data. I mean, what are you expecting on that front?
Well, we've seen it, we've seen the trough, that was 3.2, and we're certainly expecting it to be slightly higher than the 3.5 expected that we saw last month. We're actually looking at Nedbank, we're looking at closer to 3.9. The expected forecast, I think, is around 3.7%. So starting to see an uptick again on that CPI outlook. It depends on what your view is in terms of the cost push pressures, where you're seeing those coming from. We've got the likes of the wages that still have to feed through, the electricity tariff hikes, and obviously the toll roads now posing second round inflationary pressures, which we've got to keep our eye on.